If you're feeling lost or feel like trading is extremely complicated, I'm glad you have landed in the right place. My goal is going to be giving you guys the path to take you from zero to consistently profitable. What are the steps you're going to have to take to make that happen? And this is all going to be combined into one video to reveal my 2025 full trading course here. So I think this video is going to be huge value, and I know it is. This is going to be a longer video. There's going to be a lot of parts towards this video, which I will lay out for you. So sit back, get a notepad and pen, and make sure you're fully concentrated, because we're going to be covering price action, which is my preferred style of trading. It's going to be a great video. So I don't want to waste any more time. We have a lot of work ahead of us. Let's get into the main stuff. So a little bit about me. My name is Harry Sharp. I've been trading for 5 years, and I'm just like you. The person behind the camera here started off like you, so I'm here to share my experiences, not my opinions. I've been posting value, and that is my goal, is to just post what has worked for me. And in order to show that to the community, that's what led me on to live streaming. I have live streamed for over 1.5 years, showing my entry, exits, and TP all live on YouTube to show the skill of trading, which has helped, of course, grow this, and maybe why you're watching this video. So you can even join that and watch the live streams there as well. So that's a little bit about me. Let's get into the main stuff of this video and get started. So before we started, I wanted to do like a 5-minute crash course, just basically talking about what is trading and what are the different types of trading, and just a whole overview, because a lot of people might be confused. Now, this information is available everywhere online, but I want to make and save your time, and I'm going to condense this into 5 minutes. So the first part is, what is trading? Unlike investing, trading allows us to make both money when the market goes up and when the market goes down. If you have an equal move up and an equal move down, you will be paid the same amount in essence here, right? So it doesn't matter like, hey, you make more money when markets are going up. No, it doesn't matter what direction, it's direction neutral. That's step number one, compared to investing, where in investing you would mainly need the asset to go up to make money. If the asset goes down, you would lose money, right? So the second thing is that we can trade all different types of assets. We can trade stocks, we can trade indices, we can trade Forex, we can trade oil, you can trade corn, anything, commodities, you name it, it is possible to trade. And the beautiful thing is, in this video, I'm going to talk about price action, which is applicable to all of these different assets, which is extremely useful. Instead of just focusing on one, that will apply to one. Price action is the way that the candles move and the way that the charts move. So the next step is, what are the different options? Well, you also have something called prop firms. Prop firms allow you to pass a challenge, pass a set of rules that will then, the company will give you funding, which means they'll give you capital to trade, and you will take like an 80-20 split if you make profits. Now, the catch is that company's profits is mainly fueled by people failing challenges. But this is a very, very good option, and it is a very popular option, and fortunately, and it's a very popular option and can be capitalized. A lot of our members go down this route as well, and they have successfully passed their challenges. So it is definitely possible, but you need to move correctly and not move fast through these, because you need to be able to know how and what to apply and be good at the skill. So make sure you understand that before jumping, spending money on a broker and spending money in a prop firm challenge. Learn the skill. The next thing is, what is the types of trading? Well, you have scalping, session trading, intraday trading, and swing trading. Scalping, scratch off the list. I think scalping is not going to be profitable long term. I could be wrong here, but from my experience, as I said here, I'm here to share my experience, not my opinion. Scalping and messing around with the lower time frames is just asking for a slap, and is no lifestyle. Who wants to be on the chart for 6 hours, taking tons of positions, high pressure, in and out, commissions, and all of these stuff, which is cost to trade? It becomes complicated and more emotions get involved. You put yourself in emotional situations in the chart that lead to make you emotional as a person and fail in the trade, right? So that I don't recommend. Session trade means you look for one trade in a session using all analysis, because, and you might be wondering, what is a session? I'm going to talk about that next. But that is what a session trade is, right? You're looking to take one trade in a session, follow the momentum of that particular session, which I like, and that is one of the ways I trade, and is my main way of trading. Intraday means you're looking for, to hold a position throughout the whole day. I would put intraday and swing trading kind of together, because swing trading can be like 2 days up to a month, right? So that's what swing trading means, is that you take a position using higher time frames. So the last thing I want to discuss about before we get into the next part is going to be sessions. What is sessions? Sessions are very simple. The market is divided into sessions. Volume comes into the market around stock market opens and around bank opens. So you have London Open, which is the open of the London Bank. You can simply search Forex market hours to go ahead and find what time that is in your time zones. You can use Google for that. It's very, very simple. So with that being said, let's get on to that. Here's a little crash course. I hope that helped, and let's go. So this is a site you have to get used to. Before we get into talking about candles and time frames here, this software is called TradingView. Now, this is free to use. There is a paid one. I do not affiliated or anything. It's just what everyone uses. You've probably seen it online. And if you're not aware, this is called TradingView. So I recommend you make an account there so you can start analyzing these charts. This is not where you take trades. Most trades will be done on an external broker, although you can also, some brokers do support TradingView as well to be able to take trades on TradingView as well. But most commonly that will be on another platform, which you can investigate as well yourself. So I want to get into this, but this is called tradingview.com, and it's going to be the first step of what you have to go to start analyzing these charts. So with that being said, go ahead and do that. So with that being said, let's get into candlesticks and time frame. All right, guys, welcome to section number 1, where we're going to talk about candles and time frames. So what you can see in front of me is indeed candles, and what candles represent is they represent in a specific time frame what did price in the market do. The candles obviously closing green means price went bullish during that time, mean price went up during that time. If a candle closes red in my scenario, because that's the colors I've chosen on my charts, and it's the most common, means that price went down. So whenever you see a green candle like this, means that in that time period, price went up. When you see a red candle like this, it means price went down. So what do I mean? Well, each candle represents what its relation is to the time frame. So if I'm on a 30-minute time frame, this candle represents 30 minutes of price movement and closes after 30 minutes. Same would happen for a 1-hour candle. When you go to a 1-hour time frame, this would represent 1 hour of movement. This would represent 4-hour movements. The most common time frames that are used is daily, weekly, monthly, 4-hour, 1 hour, 30-minute, 15 minutes. So kind of start from like quarters, right? 15, 30, 1 hour. There's no 1.5 hour, so then it just goes from 1 hour straight to 4 hour. Those are the most common time frames that are used for analysis purposes. So let me explain how a candle works, okay? So a candle, I'm going to use an annotation here to draw the candle. So a candle has a body. This body here, right, represents the open and close price. So in this candle, this is a bullish candle, means it went up during the time, green candle. So this, let's say we're on a 15-minute time frames. On a 15-minute time frame, this means that the candle went up because it's closing green, right? So what that means is that the candle opened here. This is the candle low. This is the candle body high. So this is the open price and this is the close price. That's where the candles are closing, right? You will notice that candles have something called wicks, right? You've probably seen when you were looking at the chart, these wicks that look like this. This wick simply shows you that during that time period, because remember this candle was open for 15 minutes, during the 15-minute time, the lowest point it reached was here and the highest point it reached was here. Because when a candle is open, it can flip up and down, changing red and green, right? It can keep flipping because you don't know if that candle is going to close down or going to close up. Because obviously if it closes lower than its opening price, which means it would have closed down, right, which is lower than its opening price, the candle would have closed bearish. If it closed higher than its opening price, it's going to close bullish, right? It's going to close green, not red, green. So this is what it means. But the wicks is basically showing you the highest and lowest price it reached during that time period. Where the body closes shows you where the candle closed, right? So that's the close, that's solid. That doesn't change, right? So wicks can be important because they show you if we're reaching a zone, rejecting, because the wick will start to be longer. It can also show you the highest and lowest point, but the bodies is where the real confirmation comes from, because the bodies is where candles actually close. So what I'm going to show you is I'm going to show you how a candle is formed in real time on a replay tool. So this is PipLabs. This is a simulation software that we have. But what this will allow me to show you is I can play the ticks and you can see. So that's how the candle opens. So the candle opens here. The last candle closed bullish, meaning it in that time period, which is a 15-minute time frame, it closed up, mean price increased during that time. The next candle opens up. It has no bottom wick yet. So let's speed this up, right? We can speed this up a little bit and boom, you saw how it made the wick there. Once it made the wick, slow it down a little bit for you guys, it started to continue up. Now it rejected, it went back bearish. So at one time you saw it was closing green, now it's going back red. So during the time it's open, it can change and turn. The candle's about to close and the candle will finally close here red, because that means from its opening price, it closed lower. So this is known as a bearish candle, and a bearish candle is telling us, during that time period, price closed lower. So before we were closing up, now we're closing down. Now we start to analyze and see what goes on, and what this creates, the movement of bullish and bearish candles create structure, because wherever we have bullish and bearish candle, we create structure. So you may be wondering, what is structure and how am I going to utilize structure? This is our exact next part, which is going to talk about what is structure and how to analyze. Now you know what a candle is. When you look at the big picture, what is structure? So let's get ahead and talk about that. Right, now that you've learned about candlesticks and time frames, I want to talk about market structure. Market structure is very important. It kind of tells you what the market is doing and how it moves. And let's get straight into that and talk about the 3 types of market structure and how this is going to help you and why you should know it. So let's get into that. Let's go. So market structure is going to be the next important thing. The simplest way to show this is move this to a line chart where we don't see the details of the market. Do this and you can see there's all load of structure. You can see there's somewhat of trend here, right? There's a trend, and how we define trend is in different ways here. So what we do is we look for 3 main types of market structure that there commonly is. There's an uptrend, which looks something like this. There's a downtrend, which looks something like this. And then there's a consolidation, which looks something like this, okay? Or it could be a little bit like this, a little bit like this. It all depends on how prices form. Now, an uptrend, which is going to be the one on the left here, is going to have higher lows and higher highs. What do I mean? That means that the market is making a high and making another higher high. So making a high higher than the last one. So imagine a staircase going up, and making higher lows, which mean the lows that it's making. So whatever low it's making is higher than the last low. That will define an uptrend. Just imagine it, you can visualize it, you can see it in front of you right there as a staircase going up. That is higher highs and higher lows, making an uptrend, right? So when we see price on a bigger picture and we're analyzing, right, we can say, oh, price is now in an uptrend. It's looking, it's moving up here. We can see that moving up. When that transitions, which would look something like this, you could see there was a transition. That's going to make a downtrend. And how a downtrend is made is when you have lower highs. So it's the opposite of an uptrend, when the highs are lower than the last one and the lows are lower. A downward staircase, right? The last type of market structure is a consolidation phase, and that means there's no structure. Highs are equal, maybe it's slightly higher than the last one, the other one is lower than the last low. It's just consolidating, and typically when we see 3 consecutive structures made, it's made into that. So let me show you on the charts how we can see that with a line chart and then with candles, because line chart will be easier first. So we can see here this is a small uptrend. Why is this an uptrend? We have a low, higher low, higher low, higher high, higher high, higher low. So this is going up at the moment, which you can obviously see. When we switch on candles, you can see that's how the candles are formed from bullish and bearish candles. Now within these are going to create something, right? This is basic market structure. This is going to be useful to be able to identify what price is doing. Have we broken structure? Identifying if structure is broken would be now if we break that low, right? Because we discussed, now we're doing this right now. If we were to break these areas here, this would now change structure and we might start a bearish leg in the market, right? And this is where we start to analyze those zones. This is where we start to get into what is called support and resistance, which is how we're going to put the map, how we're going to make this all make sense. What are we going to exactly look at? How are we going to do the analysis, right? Because now we understand what candles are. We understand what market structure is. We can understand a basic uptrend, downtrend. But how are we going to put a map on the charts to know what approach we're going to have when we come to the markets? And that's going to be what I use is horizontal lines only, because they're not subjective. And we're going to mark our support and resistance. Support and resistance is going to be where we have resistance and where we have support. And we're going to do something called a top-down analysis when we come to the markets here. So we're going to do a top-down analysis, which means that we're going to analyze what zones there are, and we're going to speak about that in the next section. Before we continue, guys, I hope you're enjoying so far, taking a good amount of notes. Can we do something called the YouTube business, which is leaving a like and subscribe if you're enjoying it? I do put out this free course. It would really mean a lot to me if multiple people could see this and that they could benefit from it. I am sick and tired of people getting too lost in this game, spending unnecessary money and just ending up not profitable here, or not having the right expectations or idea about trading. At minimum, this will give them a clear path and an idea. It won't mean that they turn profitable after watching this video, but at least it's not going to tell them to pay $10,000 for a course and then end up not profitable at the end of that. That's not what we want. So leaving a subscribe, joining, watching my videos, and a like would really help. I'd love to read your comments as well if you have any, so please drop them down below. It's always a pleasure. Any questions you have, topics, leave topics that you want me to make. That would be great. If you guys write topics, hey, could you make a video about this? I can bang out this content because I'm happy to make it, you know? So yes, definitely do that, and let's continue. So you've learned the basics now, and it is as simple as that, as understanding candles, time frames, and market structure. The next step is going to be understanding how we are going to mark up our charts, because it can be confusing. You might feel lost on the charts. There's a lot of things going on, market structure, candles, but we can simplify trading in zones, and we can look at trading level to level by putting something called support and resistance. This is going to give us our zones and give us an overall picture of where we want to be looking to take a trade. This will all make sense when we put this together, but we have to be able to mark our zones. We need to be able to know the exact zones to see where we have resistances, where we have supports, and that will allow us to make a map and give us a guide on that map which we can trade. So we're going to get into that, and it will all make sense. So let's get into that. All right, so now we're going to get on to one of probably the most important steps, which is going to be marking your support and resistance, because this is going to be giving you your zones. If you don't mark this accurately, you are going to not be able to trade properly, because you're basically fooling yourself by marking things that are not relevant, or not marking enough things that are relevant, causing you to lose your trade. So being able to mark correct support and resistance is going to be extremely important, and also give you basically a guide on what to look for in the charts here. It's going to give you a guide of what to look for, so it's extremely important. I first want to get into identifying what is support and resistance. So let's go ahead and draw the two scenarios. A resistance is defined by a bullish candle. Remember, we studied the bullish candles, right? Bullish candle closing followed by a bearish candle close. Now we typically want two bearish candles to close to define a proper resistance. One will create a resistance, but two is going to be more confirmation, right? We will draw the bullish scenario as well, which is a support. So this is a resistance here, and the resistance is going to be identified as this part right here, right? This is going to be your resistance. There we go. Boom. At the bodies, not the wicks. Remember, we studied the wicks. The wicks, we don't want to mark the wicks, because the wicks are just showing us where price reached, but where candle closed is going to be more important. So remember, the next candle will open where the previous candle closed. It won't open higher or lower unless gaps, of course. That's a different story, but 90% of the time it's opening where the previous candle closed, and that is going to create your resistance. So what a resistance means is that price has found a wall that it cannot break through. So it tried to reach a level. Let's say this level is number 10 here, right? So we can draw this. Let's say this is level number 10. It reached level number 10, and we got stuck at level number 10. So since we're stuck at level number 10, we can't push through it, and price decides to reject. And the way we know that, and we can see that on the charts, is by seeing the candles close bearish from that zone. Closing is very important, not open, has to be closed, creating us a resistance. That is how a resistance is defined, and this is going to be a wall, right? And we cannot push through that wall until what? Until a candle gets above it and actually closes above that zone. Now we can get above that resistance, right? We start to get above the resistance. Whereas on the other hand, a support is when price basically does the opposite, and we have candles moving bearish going down, and it finds a floor. And from the floor, it starts to close candles bullish, same as the resistance. And that ends up creating what? That ends up creating support here, right? So that's going to be our support now. So this is protected by a floor, and that's protected by a ceiling. So essentially, when price is moving up and finds a resistance, that's what a resistance means. When price is moving down, it normally finds a support at some point. And that's what market structure creates. So you will find plenty of support and resistances around the whole chart. Plenty of support and resistances. But how are you going to identify which ones are relevant, which ones to mark, and which ones are going to be useful is the next step we're going to get into. And I'm going to show you how to do this. So to mark your support and resistance is going to be doing something called top-down analysis, which means you need to analyze where's your zones from the higher time frame. We just covered what is a support, what is a resistance, but now we need to analyze which ones to mark. And the idea is you want to mark the most recent ones always. So the first time frame you should start from is actually the monthly, but you only need to look at this once a month because the candles are closing only once a month. Now on this monthly time frame, remember we said the candle closing bullish followed by a candle closing bearish. Preferably two will create a resistance. Obviously on a monthly time frame, one candle will be much more significant than something like a 15-minute time frame. So essentially on TradingView, you go and you draw a horizontal line, and that's going to go and create your monthly resistance here. Now, if this was super far away, let's say this monthly support down here, I don't need to mark it because we're so far away. I don't need to mark that. So this, I'm simply going to double click this. I'm going to put it MR. I like to label my lines because when you start trading on the lower time frames, taking entries, because most of our entries in trading in my strategy is done around the 15-minute time frame, I need to know what the hell that line is, and I'm not going to keep switching back to the monthly. Keep your charts clean. You don't want tons of lines. Minimum lines are better, right? So the next time frame you're going to go down to is the weekly. This you just need to check once a week. As you can see here, the next resistance is all the way up here. The next support is all the way down there. So we don't really need to mark anything because this is where price is at the moment. Price is right here at the moment. I don't need to mark anything. Why? Because we're all the way here. There's nothing that's going to be relevant. Everything has been crossed through. There's nothing recent. There's no resistance or support that's next to us. The support is down here. The resistance is up there. But I don't need to mark it because of what? Because we're super far away, it's not going to be relevant during my session. You can see these little gaps. This is just how the broker looks. If there's a gap like this, you take it from whatever, from the lowest point. So the bodies, this is where your support would be. Same thing with the gap on the top of the range here, you would take it from there. Some brokers have gaps, something you'd have to get used to, but you would draw your support like this. The reason I'm not marking it is because we're super far away. It's not going to be relevant for me at the moment, right? So now let's go down to the daily. So we went weekly, monthly, weekly, now daily. Remember I told you about this in candles and time frames. On the daily, right, we have reached this level right here. Now this is going to be a previous daily resistance. So this is a daily resistance. The reason why we mark this, right, and we would also mark this one here as well, and I'll teach you why. Even though this has been crossed through, I'll tell you why we mark this. Because in the future, this can be a resistance and it can come back and be a support, right? So it still can be relevant here. It still can come back and form a support. Same thing here. If we break it, if we come back, this could then become a support, and that's how that ladder will increase. So we want to still know where those zones are, because you can see in the past we tapped that level. You can see those wicks. Remember I told you wicks will give you information. This is the information wicks are giving, is that we tapped that level and rejected it. What are we tapping? We're tapping the previous daily support. So this is where I can mark PDS. I can simply put PDS, which stands for previous daily support, right? And this is at the time our daily resistance. Why is this still relevant? Because 11 hours till this daily candle closes, it could still close below the resistance, or it can close above the resistance. If it closes above the resistance, we can still keep it because it can come back and retest it. So this is going to be your daily resistance, right? Because at the beginning of the day, the daily candle opened back here. We hadn't reached there yet. We only reached there on the previous day, which you can see with the wick. But right now, at the time, that was going to be your daily resistance. So what we're going to do now is we're going to investigate on the lower time frames here, okay? And the next time frame we're going to go down to is the 4-hour time frame. Now you can see why it's super important to be marking those daily supports, because if you were looking at the 4-hour, you wouldn't realize this zone is there, right? It's rejecting, but you wouldn't know because you would look left, and at the left hand side you wouldn't see anything. The next 4-hour resistance you would see is going to be up here. So you would be taking a trade maybe in the future on the lower time frame, and then it rejects. You're like, why did I lose that trade? The reason was your markup was wrong. And this is why markup is super important. Now, you're not supposed to get this really quick. It's going to take time. The guys that I have in the exclusive group, I make them send their plans every single day. You can see people send their plans. Now, in these plans is obviously markups. This is more advanced plans because they're including the actual plan for the session here. But you can see the number one thing there on the chart is the same markup that I have. And this is why it's very, very important. You can see that, boom, same markup that's happening. if this is marked up wrong, right? If this is marked up wrong, then that means that there's a place possibly where there's a trade that could have been taken that will not be taken, or it will be too many lines and you will miss out on the trade opportunities because you're scared of buying into resistances or selling into supports, and you just end up being a mess and totally confused. So it's an ongoing skill. It's a skill that you'll need to practice, and this is the difference. We talk about information and application. Application is going to be key. And this is why I make the guys that apply themselves every single day. I view their charts live every day when we're live trading together, right? In the exclusive group there. So it's an ongoing skill, and that's my point. My point is it's okay if you're feeling a little bit confused, and I'm just trying to show you that till this stage there are people who are still sending it on a daily basis. It's gonna be an ongoing skill to get efficient at these markups, because I know it can feel confusing. That's why I'm making this part. A lot of people from last year's video which I made were telling me about that and telling me how I'm still confused. So this is why I'm putting big emphasis. It's a skill. It's a skill you'll have to learn, and that's why we're here today, right? So understand that, and don't feel too pressured if it's feeling confusing. Just try to learn and analyze compared to my analysis. I fortunately post my analysis online, which you can compare with that, right? You can see that on my YouTube live streams. You can see how I marked up my charts. Mark up your charts before a live stream, hop in and check, has Harry had the same markup as me, right? So yeah, that is what's important. So moving on, as we were talking about 4-hour time frame, our next 4-hour resistance is actually going to be right here, because this is where candles close bullish, next candles close bearish, creating a resistance. And what is price doing right now? I put that as 4R for 4-hour resistance. Price is struggling at that zone. It's failing to go past it. So we can see that this is becoming problems, right? That this is becoming problems. So this is now giving us some nice guidelines here. We have dailies below. We have some areas that we can see very clearly now. We have some amazing spots that we can see on the chart, that now we start to have an idea where we should not buy, because the rule of thumb is that you should not buy into resistance. You should not sell into support, which means if we're at a resistance, not a place to buy. If we're at support, not a place to sell, right? And that's the mistake. That's why these lines are so important, because these are literally telling you where not to buy and where not to sell. If you're at it, don't buy. If you're at it, don't sell. It literally tells you that. So if you get it wrong, you might be selling and buying at the wrong place, right? That's why it's very, very important. The next time frame we go into is going to be the 1-hour time frame, right? So we're going to go check the 1-hour time frame here. Our 1-hour resistance is pretty close here. Typically you would mark it, but I'm going to tell you a little bit more of an advanced thing. You will understand as you watch this video, so be sure to watch the whole course for it to make sense. As you go down on the time frames, I already know this is not a zone I would be able to trade. The next step is going to be trading zones. I know this is not a zone I'm going to trade. The reason I know that is I can visually see that, right? Because I know how to identify trading zones, and I don't need to mark it because it's not a zone I'm going to trade. My buys, if I'm taking buys, they will mostly likely come above that daily support. So on a 1-hour time frame, I don't need to mark much, right? Now, the other thing is going to be something called session bias, which talks about, are you looking for buys or sells? Because today, if I'm only looking for buys, I don't need to be marking charts for the chart to go down. I don't need to be marking all of those supports down there. Why don't I need to be marking it? Because I'm looking for the chart to go up. So I'm only interested in marking the things above, right? Because those are my next targets or next obstacles in the way. So now once 1 hour, we see there's nothing really there. We go to 30 minute. 30 minute as well, we find something here, right? And this is a resistance, bullish candle followed by a bearish one, boom. So we know this is problems. And guess what? Just like clockwork, where did price see rejections from? That zone. There's a reason why it tapped that zone and rejected and is down here now. Right? It's because of this resistance here. And this is the information that we are able to gain from marking our support and resistance. You can see I marked that as 30 minute. And now I move down to the 15 minute, which is the lowest time frame I will mark here, and see if there's anything that needs to be added. We have a resistance here, but from here to here is not going to be a tradable zone, so I won't mark it. And you can see how that daily resistance is becoming relevant. You see that? How daily resistance is becoming relevant right now? We just tapped daily resistance, and now we're sitting at it again. So Now we have our zones, we understand how to mark up, and that's it. You have to do that every single day. So at the end of this course, there will be a section where we put everything together. I will actually go through the process of taking a whole trade and showing you a fresh markup using our backtesting simulator, which is basically like practicing, which is called Pip Labs, that we have to show you the whole process. And that will also show you the markup again. So you'll get another example in this video, so make sure to stick to the end and watch that so you can see another example with everything put together, right? So what would I recommend as an action steps now? Your action steps is going to go find a random chart and start trying to mark this. Start trying to mark this, try to mark it up and make your analysis, right? Say, okay, this is a daily resistance, this is a 4-hour resistance and stuff like that. So to recap, right? To go over this again, because there's a lot of information. If the zone has been crossed through once, it can be then marked again because we could come back and it could be resistance. In this scenario, this was the zone, we crossed through it once. This still counts to mark because it could come back and reject it again. If a zone is crossed through twice, meaning, right? So let me show you something that would not be relevant, right? This support here is not a support anymore. It's not that relevant. We don't really need to mark it because price crossed through it here. Nothing happened. It was smooth sailing. And then it crossed through it again. It was also smooth sailing. 2 iterations, it was smooth sailing. So since it was smooth sailing twice, it's kind of now invalidating it. I don't need to mark. So this is the idea of marking support and resistance. Of course, this is a skill that will take a little bit more time. I actually spend a lot of time explaining this in more depth, with more videos that I have with some of the guys here who want to actually perfect this. Of course, it's not going to happen overnight. And in this segment here, it's a lot of information and I don't want to confuse because it's a step-by-step process. You need to learn this first step, apply, and then you can go into like a more advanced marking up where we're really getting accurate with our lines. But hopefully you stick around on the channel. Hopefully you become part of our team and and look to execute and be good at that, and that will just be from general exposure of how I trade and what I do. So being part of the channel, leaving a subscribe would be appreciated, and yeah, that would be great here. So I would appreciate that, and yeah, let's continue with the video here. So the next part here is going to be, now that you understand where your support and resistance are, you know where there's going to be trouble, where you have to watch. The next part is going to be where we actually going to trade on these charts. Where are the zones we can look for trades? What do we need to identify? We spoke about we don't want to trade into support, into resistance, because those are acting as walls or acting as floors. We want to be trading between support and resistance. So how are we exactly going to identify those zones to be able to trade in? That's what we're going to get into right now. So let's get it. All right, guys. So the LTA stands for low traffic area. It's a term that I think was thrown out on the internet a while back. I mean, there's many variations to this. The smart money traders call it kind of like a fair value gap. That's the similar thing here. I just know it as clean candle zones. You can name it whatever you want to name it. It's just a term in price action that we use to trade price action. And it's just something that's logically makes sense, and that's why people use it. There's nothing fancy behind it, but there is ways you have to use it, and there is considerations and special techniques to make sure that you're using them correctly. So the name is pretty self-explanatory. Low traffic area, clean candle zones. It's basically where we don't have support and resistance between one zone and another. It's basically clean candles. Now LTAs, you can call them in the Tradesharpe clan lobster trading areas, if you know, right? But no, you can name it whatever you want to name it, but the name is self-explanatory. So this would be an LTA here, right? So these are all bearish candles back to back here. And the reason why this is an LTA is because we have all clean candles here. So if you look at this, right, you will see that there's nothing stopping price in this zone. Why? Because this candle opened and closed, this candle opened, closed, this candle opened and closed, and did not create what? A support or a resistance. A resistance is created when a bullish candle followed by what? A bearish candle closure is formed. That creates a resistance. So if we had a resistance in here, for example, if we had a bullish candle here like this, and then we had bearish candles continuing down, that would create a resistance here, and this would be an area where price could react. So essentially that would invalidate the LTA here, right? So these are basics about LTA, but if we have clean candle zones, what we expect is that a bearish LTA will allow us in the future to buy up to that zone, because what we expect in the future is that if price was able to move down easily in that zone, the next time when we're looking for buys, it should be able to move up easily through that zone, right? So of course we'll look at chart examples, so stay around. But the whole idea is that, look, now that we have clean candles here, if we have an opportunity to buy, there shouldn't be any issues of candles moving through this zone. Because why? Because in the past it was able to move through it smoothly, so we can expect a smooth move in the future. Now we may get a pullback in between this zone here, right? And that is totally fine. We may get, in the future, when the new zone is forming, we may get something like this. We may get a candle pullback, and then this one continues, something like this. Boom, right? But that's fine. The zone is still filled. It's still continuing the LTA. Now, if we're coming back in the future for sells now, right? Because now this is a bullish LTA, right? We understand that actually our only clean trading zone is going to be from here to here, because that is where our next resistance is. Now, of course, marking here or here, getting accurate with your support and resistance, I recommend, that is something that you need to practice. I have my free course, which you can, start to understand how to mark those zones. But essentially, this is now your trading zone from here to here if you're looking for sells, because this is clean. And then your next trading zone is going to be from here to here because this is clean. This is considered a support, right? Because we had a bullish candle followed by a bearish candle, created a resistance, or we have a bearish candle followed by a bullish candle, created a support. So this is not going to be a clean LTA right here, but from here and down here, these are both clean zones, which is where you can profit off, because price was able to move cleanly here and price was able to move cleanly here. So LTAs can be multiple candles, they can be single candles, as long as the trading range is enough. And for me, the way that I trade, I need at least, like a 10 pip range for it to be worth it. 8-10 pip range. I'm not really closing trades at 8 to 10 pips, depending on the scenario. I would say 10 pips is the bare minimum. I'm closing based on structure, of course, but anything below 8 pips, I'm probably just making that a break-even trade due to my stop loss being generally more than 8 pips. It wouldn't be worth it. So always check how big your zones are. Use the measurement tool on TradingView. Measure if your zone makes sense to take a trade in, right? So measure that. It can be multiple candles, single candles, it does not matter. Now, the important thing is, okay, why is a resistance a problem? Why can't we just trade past? Like, how come here price just pushed past and still was valid to take a trade, or still, price just pushed past here, no problems? Now, the reason how resistances work, right? Resistances work like this. What they are is basically, if we want to get technical, we're just using, past information to present in the future. The same resistance here was a problem in the future here. We can see we never closed above. This was a very tough area to trade because it was a resistance. We can either reject or push through. Same thing here, reject or push through. These 3 times, it decided to reject. But look what we have here, guys. Look what we have here. This is going to be what? This is going to be your LTA right here. That's your clean zone. Why? Because look, there's clean candles. 1, 2 clean candles. There's no resistance in these candles. We're always using most recent information, right? So if there's no basically, things stopping us from moving price, we should expect in the future, if we can get above this zone, ta-da, candle getting above this zone, we can replicate this move and get a clean move through. And then where do you think we're next gonna stop? At the resistance. Where do we stop? At the resistance. Scroll back. Now let's have a look. What do we have here? Oh, another clean zone. Where's our clean zone here? Right? Look at this. This is your clean zone. All here, clean candles, right? Let's go here. What happens? We reject at the resistance. When we get above, guess where it stops? Draw a line. Look where it stops. At the next resistance. So why does price like to stop at resistance, right? And that's how we trade zone to zone. These clean candles are our trading zones, and then we target next resistance. Trading zone, target next resistance. Look, this is your trading zone, target next resistance. And you trade zone by zone using those clean candles as areas to take trades. But why does it stop? Now, on the technical side, these are basically resistances are created by profit taking. They're created by orders being opened at that certain zone, and when we drive away from those zones, when we come back to the zones, those orders can be, generally, filled, or we can just have general profit taking from algos at that. So that's the technical thing, but that's not going to affect your trading. Does not matter, right? Because if trend is bullish and everything's pointing up, resistances will be broken and supports will be respected. So we expect those resistances to be broken. So trying to sell at the resistance is not a strategy. I know what you're thinking about. Don't focus on that. Instead, think of the market as range to range and focus on using the clean candles as your trading zone. So the similar thing for sells. If you were looking for sells, this is not an area to sell right here, right? This is not a good place to sell. This is messy. This is extremely messy. At any point here, price could reject, like it's been doing here. Okay, in this scenario, you didn't get a chance to enter, but your trading zone would be this. Look at the difference in here. All rejections, 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 rejections. You can see by the wicks, but when we get through to this zone, it's a straight shot. Why? We have clean candles, and that's your trading zone. That's your LTA. That's where you want to be looking for trades. Now, it's not as simple as that. You find an LTA, you take a trade. That's what people think. No. This is only a small part of the trading strategy. It is a huge part. I would say it's one of the most important parts, but it's not everything. It's a small part. And the reason I'm saying it's a small part because you need to have bias. You need to know what direction you're looking for on that certain day. I have videos for all of this. You need to know the entry setups and requirements in those zones. Those are the LTAs are just the zones where you're looking for trades. Within those zones, you need to make sure that it's following the direction of the bias and the session bias. We have London session, New York session. What is the bias for that session? Is it buys? Is it sells? If it's mixed, where are you looking for that? There's videos on my channel. You can see the session bias videos. I have a free indicator as well to help you with session bias. If you go on my channel, here we go. This is the mixed session bias. This is the normal session biases here. And then the entry setups, I also have videos on my channel. So check out my channel, full of good tools here. But you need to apply everything together. And most important is marking your correct resistances, right? You have to mark your zones correctly because people will miss out on certain zones. You will mark this from the bottom here, or you'll mark this from the top, where the bottom is more important. Like there's different things, and you see you'll miss out on something like that. So there's many different things that are super important when it comes to marking your zones and being able to take trades within LTAs. The other thing I'll say about LTAs is that when we have a news candle, when a candle is caused by news, which is like this, right? This type of news candles here, they don't typically count as a real LTA. That's a little bit more advanced. I might need to make a separate video about news candles and LTAs, but this is something more situational. Like when you have a news candle, you can technically use it as an LTA, but it depends on what price is doing in terms of price action at the point. Because if price action is bullish and you've had a bearish candle, you can understand that price should continue bullish, so I can just rely on structure and use as watch. So that maybe requires a second video. If you do want to see that, let me know in the comments. That is something more that you need to discuss in depth. And yeah, that is where, so LTAs are super important here, and that's why I'm making this video for you guys. And yeah, this is something that I always cover, finding the right zones. Whenever we have members in the exclusive, when they're sending their charts in, the most common thing I see is that they are taking the trades in the right LTAs, but their markup might be slightly off as to expecting, the biggest beginner mistake I see taking a trade is that they'll see a big LTA and they'll target the whole LTA, even though it might be 100, 200 pips. That it won't happen in one candle, guys. Markets go up, pull back, go up, pull back. So don't expect a push in a one candle move, right? You have to expect pullbacks and stuff and look to target relevant smaller time frame targets. And the last thing I'll cover on this, and this is where I get, what time frame can you use LTAs on? What time frame do you need the LTAs on, right? This is a huge point, right? And those who stuck to the video will get this information. Those who clicked off early are not going to get this. So it doesn't matter what time frame, whatever time frame you use to enter the trades based on your rules. So my trades most are taking on 15. I need an LTA on the 15. So whatever time frame you take the trade is the time frame you need an LTA on, right? So understand that that's super important. And then once you start identifying these zones, it's just about getting feedback, right? Getting feedback on your trades, getting feedback on, okay, was this a correct thing? Was I looking at the right thing? Because again, remember, LTAs are just one part, a big part. But yeah, I hope you guys can add this towards your trading. Hope it does help, and I hope you guys enjoyed that video. So when you come to the chart, the next step I like to include in my strategy is called bias. And this is going to be, what is my bias? Am I looking for buys today? Am I looking for sells today? I've developed a simple methodology that has helped me drastically during my trading journey. And that is what I'm going to explain now, how to develop a bias on the chart. How do you know today if you're looking for buys or if today you're looking for sells? That is exactly what we're going to discuss. So let's get into that. So congrats if you made it so far here. The next step we're going to get into is something called session bias. Now, fortunately, I've created an indicator to help you with this, but I want to make this in a nutshell. I do think leading into 2025, I will make a separate video about this more in depth on my channel. So be sure to leave a subscribe for that. But I do want to make this video because I do want to make this part because this is super important, which is session bias. Session bias is understanding in your session. Remember, we spoke about your trading in a session, London session. We spoke about this in the first part of the video, and I said it would make sense why I discuss about that. So session bias refers to, in your session, is it London session, New York session, what direction are you going to be looking to take a trade? Okay, what direction are you going to be looking to take a trade? It's going to be very, very important to understand how to identify that and what factors can you use to be looking in a session. What most people don't understand is that when you're trading one session, it's going to be only a couple of hours, right? London session is around 4 hours is the candle, New York session around the same. So you're not actually trading all of this. This is a 4-hour time frame I'm on right now. You're not trading all of this. Your trade would be maybe from here to here. That's it. You know, that would be your trade that you're taking. So you don't really have to, you need to be able to analyze the whole picture, but in terms of actually taking the trade, there's a few factors that are going to help us find what bias that is. And that's simply going to be on candle closures. I was speaking about how important candle closures are. So what you're going to use is you're going to use basically previous daily candle close and previous 4-hour candle close. So if you go to the daily time frame and the previous daily is closing bullish here, and the previous 4-hour is closing bullish, that will allow me only to look for buys in that session. I will not change my bias, right? So let's mark that and make that very, very simple. Remember, this is closing basis here, not open candles, closing candles. If previous daily closed bullish, if previous 4-hour, that means the 4-hour candle before you start trading, before your session, the one that's closed, not the current, the one that closed, session bias is bullish. Only buys make sense today. And I'm only looking for buys because if someone basically had a gun to your head and told you the only information I can tell you is a daily candle close bullish and a 4-hour candle close bullish, what do you think the next candle would do? You'd be like, probably up, right? And it is as logical as that, right? It makes more sense. Now, of course, you need to do the analysis, top down, markup. Are we at resistance? Are we at supports? Does the market make sense? Is market structure bullish? What is my analysis from today? Where are we coming from? And this is all going to be part of the journey of learning to trade, is what is the analysis? You need to develop the analysis, but part of your analysis is going to be your session bias. What are you looking for, buys or sells today? And obviously the opposite means that I would look for sells. If I saw daily candle close bearish, previous daily and previous 4-hour close bearish, I'm only looking for sells, right? Again, with the analysis. And most of the time you're trading a session, so you expect the next candle to form bearish, right? Or in this case, form bullish. But that is pretty simple. So let's go ahead and identify a few session bias here. So now let's go skip a candle. All right. What happened here? It was easy, right? When previous daily closed bullish, previous 4-hour closed bullish, but now we still have previous daily closing bullish. So when previous candle closes bearish now, we have a problem. And what's the problem? Problem is now we become mixed session bias. What does that mean? That means we can look for both directions. And this is where, tying back to what we learned before about having your trading zones. Because in mixed session bias, you could have price inside of a range, and outside of this range, here you have a LTA clean candle zone to take buys, and below you also have a clean candle zone you can take sells. But this is where you need to use a bit of work and you need to analyze what the hell is going on the charts. What is price doing? Price has been moving up during this time here. Now we have found a resistance. Look left. Are we at a resistance? We are pretty close to one. We are pretty close to a resistance, so we can start to see some sort of pullbacks. Remember, you are trading only the next 4-hour candle, but at the same time, it could continue bullish. So a mixed session bias can be any way. We can see previous daily close bearish, but previous 4-hour close bullish. Check where is that 4-hour closing bullish from. Is it closing from a support? Is it closing from a resistance? Where are we closing from? Because if a 4-hour candle is closing from a support, something like this, you see these type of closes here, when we get this type of close from a support, it's probably going to mean that more likely for us to continue up. But if we close below and then a 4-hour candle is closing bullish, that could just be a small pullback to continue the staircase, because you have to also understand to read candles backwards. Because if markets move up like this, don't know why it's squiggling like that, but anyways, this pullback could have been for 4 hours, but it's just a pullback to continue price, equivalent to this. But since we're trading a session, you can still catch an opportunity for sells depending on the range. So let's go into price and see what's happening on the lower time frames and see if we can find that LTA we talked about, which is actually going to be below this zone right here. So if price was to get below this zone, we have clean candles here. That's where your sells could make sense. And on the other hand, the buys could make sense above here. Why? Because we have an LTA, well actually above here is where our LTA is. That's where our clean candles are on a 15-minute time frame, which would be a trading time frame. So in a mixed session bias, you can take both. If today was a bullish session bias, I would only be looking for buys, no sells. But in mixed session, I could also look for the sells here, and you can see what ended up happening. We closed below and got a pretty nice move to fill into the next support. So that gave me the okay card to take sells in a scenario like this. Now, this is obviously it in a nutshell. Now, there's something that will help you identify bias. So remember, bullish session bias, to recap, bullish session bias is when we have previous daily bullish, previous 4-hour bullish. Bearish session bias is previous daily bearish, previous 4-hour bearish. Mixed session bias is when either or are mixed. Daily could be bearish, 4-hour could be bullish, etc., etc. I have created an indicator called Tradesharpe session bias. You can go to indicators on TradingView and type Tradesharpe, just type my name, Tradesharpe, and then click this one here. This is session bias. This will pop up. You can adjust it wherever you want on the screen. You can have it bottom left, bottom right, but you can see it will tell you if it's a mixed session bias, exactly like we just discussed in this example. We have a mixed session bias. It will tell you what the session bias is. Obviously, if I rewind to 4 hours before, when we had a bullish session bias, my indicator will say bullish, right? There you go. You can see. So it kind of helps you. It kind of gives you a little bit of help. So make use of that. You can even make it bottom. You can change the settings here. You can make this bottom right here, so you can see it at the bottom of the screen. There you go. So you can really customize it to where you want it to have. And it's such a small indicator. Yes, and it costs nothing. So hopefully that helps. This is session bias. This is going to start to help you identify what direction to look for in the charts. It does get a little bit more advanced with session bias here. But this is what you need. I don't want to overly confuse. Again, this is an ongoing process. It's a lot of information to digest in all of this. This is why I separate it nicely most of the time for people looking to get into this and learn this. I like to separate it. As an example, when we do, it is a common question to speak about session bias with people. A lot of people speak about session bias with me, and we go over that topic multiple times. I have multiple parts of that topic that I store in the video library in our group. So we go over that multiple times, which I keep in the video library, and potentially we'll make more YouTube videos on that if that's what people so desire, which that's why I told you to leave me a comment about that. But this is session bias. Now we move on to an exciting step, which is actually understanding how the hell do you take entries. You basically know almost everything. Now you just need to put it together and start to take entries. So we're going to cover that. So now we get into some of the juicy stuff. We know how to mark up our charts. We know how to find bias. We know how to mark and find our trading zones. But how are we going to enter? What are the setups we're going to use? I'm going to define these in 3 simple setups that I use and is my most common setups to enter in these markets. So when you put that all together, which we will do at the end of the video, so be sure to stick around, it will all make sense. So now we're going to dive into the top 3 setups that I use to enter in the markets here. We're going to just explain these pretty well. So let's get into it. All right, now we get into the interesting part. This is the entry part. So you've learned how to mark up the charts, how to find bias, how to find your trading zones. So once you understand bias, you've marked up your charts, you know where your support and resistance is. The next step is going to be looking for entries. And that's going to be your trigger where you're going to actually enter a trade, put a stop loss below or above a candle. I'll show you how to play stop loss. Stop loss essentially means where your trade is wrong. So when you enter a position, I recommend you watch videos, spend some time understanding how to enter position. You will enter the size, your amount you're going to trade. That size will be dependent. We will cover that as well later on in the video in the risk management section. You can see it below in the risk management section. You can see that below in the risk management section. You'll be able to find a little bit about lot sizes, right? So go ahead and check that out. But this is the interesting part where we put it together and you actually learn how to enter, okay? So this is going to be important. This document here I've made for you guys is actually going to be available in the free Discord group. It's a free PDF. There's so many tools in this free course here. We have the indicator, PDFs, and you name it. So this is going to show you how, basically a little picture example so you can have that and understand. And these are my top 3 price action setups that I commonly use. We're going to start off with setup number 1, which is the most common trade. If you go and see my live stream journal here, this is all the trades I've been taking in London session exclusive. You can see a repeated pattern of setup 1. Setup 1 happens quite a lot of the time. Huge amounts of setup 1. So it is the most popular setup, which is why I called it setup 1, because it's the first one that comes up a lot here. And we're going to study how it works. So this is going to apply to all the setups, but I want to cover it before we continue with speaking about setup 1. So some of the notes is you must follow what the overall bias and trend is doing. Now I should add bias here, but by trend, not market structure trend. I'm talking about what is price doing for that session. You have to trade during volume times. Very important rule, this one. What I mean by volume times is that you have to trade during the times of volume, which is going to be your sessions. Remember, we spoke about that very early on in this course. We spoke about volume times, right? What is the best session for trading? Is going to be London Open, NY Open, NYSE. They're going to work during this time. Other times it's going to be hard because we need volume to continue price. And it works on all time frames. You can take this even on higher time frames. But for me, my favorite entry is 50-minute, 30-minute, and 1 hour. How do you know which time frame to enter on? Well, it's simple. Look at the clock, right? If it's 2:15, 50-minute candles closing can give you an option. If it's 2:30, you'll have the 30-minute and the 15-minute candle closing. Make sure they both make sense. But let's go ahead and look at how this setup works. So the first thing we need when it comes to taking these entries is we need clean candles towards the left, right? So you need those LTAs. We spoke about that in the previous sections about having clean candles. That's number 1. We next need a resistance to be formed. Now, all of this I'm talking to about is on the time frame you're looking to enter. So a 50-minute in my case here can work on a 30 an hour, right? So you need a resistance to be formed. Once a resistance is formed, you also need a support to be formed. We discussed how that's going to be formed. The next thing you're going to look for is a 15-minute candle closing above or below. Remember, this works both ways. I'll show you some examples. And what you're going to do is you're going to look for the next candle to open up, make its bottom wick, and then break the high. Once it breaks the high, that's where you will have your entry, and the stop loss where your trade going to go wrong is going to go below the candle that closed above. Remember, not the current candle, the candle that closed above, okay? So I'm going to show you some examples of this, of how a setup 1 looks like. And you have to make sure if there's a 4-hour level here because you did your markup and there's a 4-hour resistance, it's going to invalidate the trade because there's no clean candles. You're trading into a resistance. Remember, we discussed do not trade into a resistance. So if we go ahead and look at on the charts a few examples here of setup number 1 here. So let's go ahead and just scroll to a random spot. We can see one right. Let's go see a clear one here. So this is going to be the cleanest one here, which is going to be setup number 1, which is going to be closing above the range. Now this candle's a little bit big, so we could use a little bit of a better example here of something where ideally it would look something like this. So here's your resistance. You would make sure you have clean candles to the left. So you scroll left. Obviously your whole charts need to be marked up, not just one line like I'm showing you in this example. So you'd find a resistance here and you'd say, okay, do we have clean candles? Yes, I do. So you can see here that there are clean candles up to this next resistance. So if we come back here, boom, we can see what happens on price. Price closes above that resistance here. So that can be the entry trigger of your trade. Now, what's very interesting is this is what's called risk to reward. And it's why I wanted to show you this example, because check this out. If you're putting stop loss below previous candle, look at the risk to reward. You are risking, see this number here is called pips. This is what measures how big the move is. This is how you will calculate your trades, right? So risk management is going to come into this, and it's how your trade is going to be calculated. This is called pips, and it calculates basically how much risk there is on the trade. Depending on what size you put on your trade, 1 lot, 2 lots will mean how much 1 pip equals, right? So if I use the 1 lot on this, it would equate to $250 risk. If this was a 30 pip, would equate to $300 risk. If you use a 0.1 lot, it would only be $30 risk, right? So my point is, you're risking 26 pips to make 6 pips. Doesn't make sense. It's a bad trade, because long term it's a losing trade. You need to win this 98% of the time to make money, because the time it loses, it's going to take a lot of wins, you know, maybe like 5 wins. So the idea is you don't want to have a resistance right next to your entry. So if we look higher here and see this one, right, this resistance here, and remember, setup 1 doesn't have to be a most recent, it could be a previous as well, right? And we go see, okay, where's the next resistance here? Next resistance is also here. Pretty choppy zone. But why I want to make you guys a little bit advanced from the beginning is that this zone can be used as a break-even zone, meaning you don't have to lose this trade. In trading, what we can do is we can take the stop loss and put it to our entry. We can put it to our entry and we lose nothing once it reaches the next zone, and give price the opportunity to then complete the move, where now you can see it push through it no problem, because this is always a question mark. With volume, with price going up, we should be able to break highs, break highs, break highs, right? So what we can do is we can use this zone to move our stop loss to break even, so that if it comes back to our entry, we lose nothing, okay? Only commissions. So that's why I'm starting off with a pretty advanced example, because I want to get you guys on point already. Now let's go into a little bit easier examples before you guys get scared and click off the video. We'll keep it a little bit easier for setup number 1 here. So let's delete these lines, scroll back and look at a different example here. And I want to show you a selling example here, right? This is a selling example here where we get a close below the range here. So this is your range, right? You can see we have clean candles here below. And what would we be looking for? Well, you'd be looking for to capitalize off this zone. Here's your support, which is the candle that closed below. This is the candle that closed below. This one right here. Ta-da! You normally wanted to have a wick, but I'm just showing you this as an example. Your entry will be on the next candle that opens. So this is how it will look. Let's replay it, right? So as you can see, this one actually did close below. Your entry would be on the next candle, boom, breaking the low. Stop loss would be above the high, the same as the PDF, right? And you would target the next level, which would be one of these previous levels. I didn't mark up my charts here to show you, but you can see now we're risking 7 to make 12. It makes more sense. And this is now giving us more risk to reward. Even getting a 1-to-1, we want to be closing. The levels you target is whatever is the next level. So let's say we had a 4-hour resistance here, and then the next level on a 15-minute is all the way down here. So we would obviously target the 4-hour first, or any level that comes first. Then the next target would be this level down here. But you want to normally be closing at the first level, because that's your job, to get from point A to point B and be done, right? So let me show you this. So here's an example that I found on the charts, and I want to use Pip Labs here to show you how it looks in real life with a profit moving, with entry here. Again, as I said at the end of the video, I'm going to do an overall how the analysis works, how to put it all together. We do have other setups to go ahead and look at, but I want to show you this now. A simulator is a great way, because it's going to simulate how this would be in a real life environment with the candles moving and everything, and it's going to be super educational for you guys to see that. So what we're going to do here is we have a plan today. Again, I'm not going to show you the plan, because we will keep that for the last part. And the plan is going to be, I'm looking for buys today. I found my resistance, I found my support. Towards the left here, this line indicates where my LTA ends, right? So my trading zone. I have clean candles here to the left. I'm not going to scroll back to save time, but I have clean candles to the left. If we can close above here, this will be the entry trigger of setup number 1. So we can skip and see, boom, that's where we get a close above right now. Okay, so right here is another resistance. Like the first example I showed you, we can trade to here and see if volume is going to push through. and see if we can get to the next level. This is only relevant a small resistance here. I just wanted to mark it anyways. It's not going to be too important. It's not like a 4 hour. If this was a 4 hour, this trade wouldn't make sense, right? With this long wick here, it makes it tough, and it's why I chose this example, because what do you do here? In some scenarios, you can take the wick fill here, which means that you can fill this wick to continue here. But in most scenarios, you want to be entering break of high, and this is where wick fills become a question here, and you need to watch the videos on my channel to understand that it's more of an advanced concept. So in real conditions, I would enter on a wick fill, but for simplicity, we would enter here break of high always, okay? Stop loss will go below candle low at TP wherever, okay? TP, I don't like to keep TPs on the chart. Why? Why don't I like to keep TPs on the chart? In case price pushes heavy, I still want to be in the position, right? Even though it hit my TP, it might keep pushing. And I'm like, okay, now I'm just getting extra. Anything plus here, I can take that, right? So this is now calculated my lot size. If you saw that, we'll actually place that again so I can show you. All right, here you go. Boom. This is the stop loss. So if my trade hits this area here, I will lose the trade. I won't make, I will lose how much I risked. My risk percentage is 1%. So if I hit stop loss, I'll lose 1% of the account balance here. This software automatically calculates my lot size, so I know how much I am risking here. And your target can be a 1-to-1 is perfect wherever you want it to be. Whatever the next resistance is where your target should be, right? So we'll leave it off. As I said before, I don't like to keep on the chart. So 1%, once price next candle opens, that's my entry candle. Once it breaks the high, it will trigger me and I'll get in the position. So let's speed this up here and see what happens. So you can see now we've been triggered. You saw how that triggered us. This is P&L right now. You can see we're in negative. I'm actually down on the trade. So this is the scary part of trading. You're going to be down. It doesn't mean I've lost the trade yet. I lose the trade once it hits my stop loss down there, right? So you have to trust the plan, and this is where this is where you can't practice that emotions with me just teaching you. This is why softwares like these are very helpful, and just to show you this example, and this is how real trading is, right? So now we're back in profits, the fun side of trading. We're pushing nicely through this zone here. You can see we're up about $800 right now. That's 1-to-1. I risked around $1,000. You're up already around $800. I didn't do the analysis to see what levels are there towards the left, so I don't know where we're going to reject on this. But obviously I need to go ahead and mark up, because it's obviously might be rejecting something there. But typically that's how this works, right? That's how this works. You can close the trade here, boom. That's how you close the trade, and you can see that's the trade we took, right? Right, that's the trade we took. This was the first one we took that I deleted, and then this is the one we took here. So that is setup number 1. Let's get on to setup number 2. So setup number 2, this is a continuation setup. Setup number 2 is a pullback setup. Now this is very important because sometimes we can't buy highs. When can't we buy highs? When there's been a big push. If we go ahead and look at the charts here, and I actually want to, and we look at the chart, this is a scenario that you just can't keep buying higher because there's no structure. Remember, setup 1 wants to have something closing above, right? So you can't just keep buying higher because at any time this can turn around. This is where you want to wait for pullbacks to be able to take something called what? Setup number 2. And let's go on a responsible time frame here. And this is where you want to wait for pullbacks for that exact scenario. So let's go have this is another example here. Straight pushing, no pullbacks. You need to wait for pullbacks to be able to get entries. Same scenario here, wait for pullbacks. And that's where setup 2 becomes useful, because setup 2 will give you an opportunity. And here's another opportunity as seeing that. So what can we see here? Well, we know setup number 1, if we have clean candles to the left, if trading view will load here, please, sir. So if we go back to the scenario, setup number 1 would be what? Setup number 1 would be a close above this range. Here's the resistance like this. Obviously, this is a too deep close. It closed too deep. It's not going to make sense, because if we rewind to this candle here, look where we reached. We reached resistance. You can't buy at resistance. Remember the rules. There's no clean candles. The rule is you need to take a trade with clean candles. But this is what's cool about setup 2, because as we pull back now, we create clean candles. We create clean candles for us to now trade. So this pullback now creates the clean candles. When the next candle closes bullish to create a support, you need bias, you need structure, everything to be supporting buys. This creates setup number 2. And setup number 2, you can take breaking the high like setup number 1 with a 15-minute, 30-minute candle close. Stop loss goes below the lows, and your target is going to be the resistance. you're going to target what has already been made. You don't need to target a previous zone, because what already has been made is the resistance here. And that can be your trade. Boom, TP smashed, right? And this one continued afterwards as well, which is nice because you're entering on a pullback. So when is the time to use setup number 2? The time to use setup number 2 is when we need a pullback. When it's been too extended, you've had back-to-back candles close bullish, you can't go ahead and use setup 1 because there's no structure there. You need setup number 2. You wait for pullbacks, wait for support to be formed, and target the level that was formed. So you don't need to look back in previous for different targets. You can target what has been formed, which was the resistance that had been formed. Same thing would go for sells. Let's see if we can quickly find some sort of random example here. Obviously this will be a hindsight example, but I just want to show you how a selling example would look like. Something like this. Say today we were looking for sells. Yeah, I would say something like this. Today we're looking, nah, this is too complex. This would be one here, but with this structure here, I mean, we can use it, no problem. Today we're looking for sells, you know, this would be setup number 2 to the downside to continue down. You'd actually take this one as well, but this hit target, right? That's why it rejected. Next one hit target. So those count as well. They count as well, and it's good to see different forms of them. They're not always going to look picture perfect, and I think that's what a lot of people don't understand, is they think they all look picture perfect. They won't, you know. So a lot of these are bullish ones. This I need to find when price was going down. Let's see. There we go. Now price is going down. We can find some bearish ones here. So here would be clean examples of one where we push quite heavy and we need to look for pullbacks. There's your pullbacks. This one even gives you a change of structure here. This one's a good one here where we push heavy down, we wait for pullbacks. Ideally, you don't want this wick here, but that's the concept I'm trying to explain. So I want to show you some examples. We find a bearish one here as well. I'm going to use here, we were using GJ. I'm going to use gold as well to show you it on different assets and different scenarios when it happens. So I want to show you one when it's going down. Price has not been going down. This is when price is going up. Actually, gold went on a massive rip towards the upside. Here's one where it's going down, so we should be able to find something inside of here where we get type of setup 2. Yeah, this is a perfect one. So we push down too deep here, too deep we push down. You can't take setup 1. You wait for the pullback, resistance created, boom, this is your entry time frame. This one gave a little bit of a, what I call a nipple wick, and you put stop loss above the highs. You target the next level down here, right? This you can even leave to run if you have higher time frame targets, right? That's a bearish example there. Bullish examples, we can find a lot because price was going up towards the upside here. So this would be essentially just pullbacks, right? So it didn't push here, it pushed a little bit deep. This one created support. You'd have to worry about this resistance, but you're looking for deep pushes. This actually moved up very beautifully. Structure, you see all the structure? When there's structure, you don't need to wait. Here, this is the time you need to wait. Boom. So this would be one where you get the pullback, but now you need to ask yourself, is it worth it? Is it worth it? Let's check. Stop loss would be 51 and take profit would be 28. Not worth it, right? Not worth it. So you needed to push through for it to be worth it. So that would come up to analysis if you could imagine it can push through or not. So the last setup I want to cover here is actually setup number 3. And this is an exciting setup. So this happens when we're in heavy momentum. Sometimes we close above the resistance here too deep, or we're moving too fast. There's not enough time for price to pull back, so it creates a little pause candle. And this is one bearish candle it forms. We can actually enter impulsively at the break of the high when that bearish candle forms. So this is when it closes too deep. That same example is set up 2, but sometimes we just close too deep for price to continue here, and we can't get the continuation. So we can't get the pullback, for the continuation. So what ends up happening is we get these little pauses in the market here, right? So they would look more clear like this, right? Here's one. Let me show you. So this pushed too deep. You can't take a trade. So this is the same scenario where you would be looking for that setup 2, right? The one we just covered. But sometimes there's so much momentum in the market, it only creates a pause candle like this. But we have the confirmation of price closing above. So this is where you can take an entry like this with stop loss below the previous candle, the bearish candle low, the candle that closed red low, or green if you're trading the opposite way around. TP whatever the next level is. Remember, always TP the next level, right? And your entry would be as soon as it breaks the high here. Boom, like that, you're already triggered in the position. Like that, you're already in the position, and you're looking for that to eventually continue. I wonder if it did. Yeah, it did. Boom, yeah, it eventually continued here. I mean, this is more than a one-to-one. One-to-one would be, you know, remember, risk to what you make, one-to-one would be there, right? So whatever you risk you make, one-to-one would be there. But this is the idea. That's one example there. Let's go find a bearish example of setup number 3. Okay, so a bearish example of setup number 3, we need to find price moving down heavy and see if we can get a bearish example there. Let's see, heavy movement down. Here's a nice one actually. So this one you would have been entered here. Boom, this one right here. This one has wicks, so actually I don't want to use this example because this would be complex. When there's rejection wicks like this coming from a support, it's actually not valid. You would just take the setup 1. See this support here? You're selling at support. It's not valid. So this is good to show this to you guys. It's not valid because there's support here. You would just take the entry when it closes below setup 1. But here's a good one. This is a good one right here. So we close too deep below. To be honest, you should be taking the setup 1 here, the close below. But let's say you missed it, whatever. Now we're closing too deep. We haven't reached target though. We haven't reached the support. We still have clean candles. This is where you can wait for that pause candle. Boom. Okay. And now you can enter breaking the low to get to that candle and see what happens. Right? That's how it would look. Boom. Get triggered. It's actually negative risk to reward. We'll see if volume did push through. Boom. It did. So you'd be break even here. Boom. And did you get TP? Boom. Smashed. So yeah, very exciting. And yeah, that's how that setup works. Those are the 3 setups in a nutshell. I do have more detailed videos on my channel, which you can check out. But again, I want to keep everything in a nutshell, smooth and clean. This is something you'll have to practice, backtest, identify, keep looking at the pictures. It's not going to happen overnight. I told you guys. But at the end of the day, you know, this is going to be very, very, very important information here. So the key with setup number 3 is that what happened is that the previous candle before gave us the confirmation that this makes sense because it basically formed a setup 1. What's happening is lower time frame is creating structure and proving price doesn't want to go up because that structure created ended up breaking the lows. So if you look at how this looks in price action on lower time frames, it would look something like that, right? And this was that little breather candle, right? That created that. So essentially it's just what we practiced right in the beginning, lower highs and lower lows, right? And that's what it's creating, lower highs and lower lows. Okay. And setup number 1 would be a straight break of structure, a continuation where we break structure. How do we identify a break of structure? Would be when a candle closes below or above a resistance or support. Not a wick. A candle closing above or below is a break of structure, right? And setup number 2 is going to be you trading. Let's say this is a trend, right? So I'm basically recapping everything. You're trading the pullbacks of the trend, even bullish. You're trading inside of the pullback phases, right? Because that's the 3 ways price can continue in price action on the markets. We can continue in terms of breaking highs and lows. We can continue off pullbacks, or we can continue with momentum. That's the only 3 ways price will continue. Price will react off zones. Price will push through zones. Price will range, which we don't trade because there's no clean candles. Or price will continue with momentum. There's no, price is always reaction based or continuation based. That's how it works. So we trade based on confirmation, which I include trading based on candle closes here. So a great resource is to be able to go in the stream journal, and there's actually screenshots of the trade I took. Also, you can go ahead and watch back the trades and see how I took it. You can see there's screenshots that show you how the trade looks, so you can compare. This was a setup 1, obviously. It looks very, very, very similar to, obviously, the PDF. As you can see, this looks very similar to this, right? Check this out. Close above, structure, boom, trade taken live. Very similar scenario. So they're always not going to look as perfect, but this is how it basically works. So I hope that you guys understand and can start to implement these setups. It's not easy as ABC. It will take some time to understand it. Be sure to watch other videos on my channel to gain deeper understanding as well. With these setups, there's breakout videos that are all using these setup. Pullback entry is going to be set up too. All of these videos are covered. You can watch one of my old videos that is even good. It's called Top 3 Price Action Entries. Watch that as well. It's also going to help you there. So that being said, let's get on to the next segment here. Congratulations, guys. You are doing well. And I hope this is a lot of information, but I hope you guys are enjoying so far and things are starting to make sense. So let's continue. So you guys are very lucky. This clip is actually going to be a surprise clip. This is a bonus clip, and this is going to be taken from my exclusive group. This is one of the things we do. As I said, I like to build content in there based on what people's needs are. We discuss every single week in webinars, and I'm going to include a video from one of our content library here just to help you guys out. and I'm going to include a pretty important one. I'm not going to spoil it. You guys will have to find out. You know everything till now, but this one I'll let you watch, and hopefully this can help you. So enjoy this extract from the exclusive group, and let's get it. So first thing we're going to talk about is cascading supports. What is a cascading support? It's basically when we move down on time frames. So let's say this is a move we have. This is 1 hour support. This is 15-minute support, and I'm in 30, and then it looks something like that. So that's cascading support. That this would be a 1 hour support here, right? This would be obviously a 30-minute right here, and then lastly this would be a 15-minute. So what that means is that when you are on the 1 hour, right, you have a 1 hour support here, but then it's an LTA on the 1 hour. But when you check the 30-minute, there's a 30-minute support here, then an LTA, but it's lower than the 1 hour. Then there's a 15-minute support even lower, and then it's clean. So which support do we take, right? Because we don't know if it's going to react on each one of those. So how are we going to tackle this zone? So the main thing is no matter what time frame you take should invalidate that support. So if you're taking a trade based on the 1 hour, then you don't need to worry about the 30-minute 15, because it's based on 1 hour. Stops will be based on 1 hour, right? If you're taking on 30 minutes, same story, 15 minutes, same story. But there is a time where these two supports here are going to be important. And the time they're going to be important is go back in the charts and see if that is a zone. So not only is it just a support that's going back, but if you go back in the chart, has it been a zone that we've been reacting off in the past? Because if the 1 hour is clean, but the 1 hour support is up here, but this 30-minute support down here is a zone, which means that price has been reacting off it multiple times in the past, you probably need to take price below that 30 rather than going at the 1 hour, even if you're taking the trade based on a 1 hour. Now, us trading on the 15, most of our entries will be looking at the 15-minute support. It doesn't have to be this dramatic where we see so many, it's so low, but that's the best way to tackle cascading supports, is looking, okay, how relevant is it, right, in the past compared to right now? If you mark the 30-minute here and you go back and it's just only this 30-minute right here, doesn't make any sense for you to worry too much about it. And if you get a 1 hour close below your 1 hour support, you can just treat it as so. Obviously, us trading 15, we need a close below the 15-minute support. Normally, if these two, the 30-minute and the 15, are further far away enough, then we don't really need to worry about it, because we could trade from here to here, right? This could be a tradable range. So we'll see if we can find an example of a cascading support. But does that make sense overall? So you're just seeing how relevant is it compared in the past. But are we understanding? It's hard to find cascading supports. Let's see if we can go and find one. So it could be also cascading resistance. This probably might be one. So on 15-minute, we have a resistance here, but we won't have that on a 30-minute. Yeah, you see the 30 minutes lower, and then the 1 hour will be even lower, right? You see that? Yeah, this is the example. So which one do you use here? All right, so this would be a good question. So I want everyone in chat to type in a short sentence, short phrase. Which would you consider? Right, I'll give you more information. Here's a wick. In the past, we have a rejection zone somewhere here, but that's about it. Otherwise, we've crossed through once easily, crossed through twice easily. Which one are you using? This is a 1 hour. Put this as 1. This is a 1. This is a 30. So which one are you taking buys above? And or what's your plan for? And this is a 15. You're taking above the 15. Okay. Some people say 15. Most people saying 15 here, taking buys above. All right. So the way I'm going to tackle this, need 1 hour close to buy above anyways. Okay, depending time frame you're trading. These are better answers. I like this more in depth. So obviously 15 is more clean and simple. There's no doubt between the 30 and the 15, you're going above the 15, because there's no point of buying so close to the 15 when you can just wait a little bit further, right? So between these two, yes. But if we were to measure between the 1 hour to the 15, It's about 8 pips there, 8 pip difference. So the way I would treat this is if there's a trade opportunity on the 1 hour where we get a nice 1 hour candle close above, like this, I can take it based on the 1 hour but run 1 hour stops. If 1 hour stops, let's say this pushes down and the next 1 hour closes above deep, this 1 hour stop's probably not worth it. In that case is where I would say, hey, this is running too wide. I probably don't want to even take that trade based on the 1 hour. So then we're going to do what you guys said, we're going to go based on the 15. Because imagine a 1 hour closing above here is pretty nice because it's a clean candles on the 15. So don't disregard higher time frame, right? Because if the trade does make sense on 1 hour, just take it on the 1 hour. Otherwise, you're going to probably miss the trade, right? So that's how I would tackle this. Now, obviously, if we're closing somewhere deep here, we're going above 15. But if we get a nice perfect little close above here, I'm taking that based on the 1 hour, putting stops based on the 1 hour to get up there, because that's what's coming first and that's my next option. Now, what's more likely to come is, yeah, we'll be trading above the 15 because there's more 15-minute candle closures than there are 1 hour candle closures, right? So we probably have a higher chance. It will have to line up perfectly with a 1 hour close above in order for that setup to happen, right? So, but if it does, then that's a good opportunity because that's doing something what all of those candles that wicked above could not do, which was close above this zone. So it would be doing something different, which will give you that continuation, right? So that makes sense how to tackle these cascading supports and resistances. Starting to help, right? Any questions about that? Just want to make sure it's clear. It's not the most complicated thing, but sometimes could be a little bit confusing. But hopefully this has cleared it up. If it has, let me know. And if not, then we can clear up anything someone has. So now I want to include a bit of the extracts of risk management. This is a huge important step and it's going to make sense once I include the extract. So let's get on to risk management and enjoy that. So before we get started, the number one thing about risk management is if you're a beginner trader, even an advanced trader, you need to have a budget. Companies use budgets. Why shouldn't we use it as traders? We're trading like a business, right? Because our goal is to make money and we have to treat it like a business. We have to have proper operations, proper protocols, and proper management, right? So when it comes to risk management, there are obviously a few basic parts about risk management, which is known as lot size, calculating pips and points. So as we know, the markets move in something called pips, P-I-P-S / points, right? If you're a futures trader, then you're going to be using probably points. If you're a Forex trader and also trading, we can calculate in pips as well. Now, relative to that is going to be what? Is going to be your lot size, right? Lot size / contract size. So I'm going to say this in case people trade futures or trade something with contract. So for lot size, you have to be calculating that against pips. You can also calculate it against points, but mostly lot size is going to be calculated against pips. Contract size most likely calculated around points because contracts and points go together. So the main thing to save you time instead of learning is to make a Google search on how lots are calculated against pips, all right? But I'm not going to go into the calculations because it's going to confuse you. But normally, if a one-to-one basis, one lot is equal to 10 USD per pip. So if you have a stop loss, right? Because whenever you take a trade, basic risk management, you need to have stop loss, entry, TP, right? Set. That's your main thing. You have to have your stop loss, entry, TP. Never trade without a stop loss. Even if you're at the charts, keep a stop loss. You don't know what random candle can come, right? So if your stop loss is 10 pips, right? And we know that and you're opening a one lot, and we know that it is per pip $10, that means your stop loss at 10 pips is going to equal 100 USD. So you'll be risking 100 USD on this trade here. Reason being is that one lot, right? If you open a one lot here, right? So it's going to equal 10 USD per pip and the stop loss size is 10 pips. So you're going to be risking 100 USD on this trade here. So you need to be calculating that before taking trades, which is why you have to have a plan before taking a trade so you can calculate your lot size. Now, fortunate news is you don't have to calculate that. But just as an example, let's say I wanted to risk $50 on a 10 pip stop loss. That means that, again, I would use a 0.5 lot. Why would I use 0.5 lot? Because that would equal $5 per pip, right? But let me make your life very easy and you can start experimenting this by yourself. Just go online, search lot size calculator, and then just input it. The pair you're using, input how big the stop loss and start seeing the amounts. But you have to be doing this. A second thing you can do is be using a trade manager. Now, all of that stuff out of the way, that's more of the calculation side of risk management. And the main point I'm trying to prove here is that you have to be calculating that before taking trades. Know how much you're going to risk. Now, it has to be a percentage of your account. Just because you have a $100 account doesn't mean you risk $50 per trade. Right? Don't be doing that. That's extremely silly. Okay, that's 50% of your account. You're gonna blow it like this. So that's a little bit about lot size, contract size, all of that stuff. Now, when it comes to risk management, half of the reason you're losing in trading is you're over trading. Your goal is not to take as many trades as possible. Your goal is to take quality trades. I see so many traders get burnt out. They do well, profitable, boom, lose it within 1 week, lose all of their profits and are back to square one. So how much of our account should we be risking? 50%, 20%? No. You should really be risking, I would say 1 to 2%. And if you're funded, you should be just risking 1%. Because 2%, you lose 4 trades, that's already 6% down. You already passed 50% of max drawdown limit already. So now, if your account, okay, if your account is already in profits, let's say, okay, now you can start risking 1%, continue with the 1%. But once you come back to break even and start to dip down, the fact that you came from an account that was in profits, and this is the break-even point down here, and now it started to come back into break-even, that downward swing is going to knock your confidence because you lost all the profits you originally made. Not only is it going to knock your confidence, you need to start managing risk from now. Go down to 0.5% risk. Don't let the account drip into drawdown. Avoid that. Right? So that's how you can manage risk as the account comes down and fix what's happened. Has the market dynamics changed? Is my trading psychology off? And once you fix that, you're going to hover maybe here, but then you're going to be back up, you get back to the 1%, etc. Right? And this is going to keep you from dripping into that drawdown. And then again, boom, you're in drawdown, your psychology is bad, you're not making money, you're losing money, you saved yourself there, right? Even when you start a new account, if you're not that confident yet, risk 0.5% on the new account till you have 1 to 2% profits to play with, and then go risk the 1-2%. Obviously, you could lose that in 2 trades. It's possible, but hopefully with a profitable plan, you shouldn't. But then you know what to do if you're coming back to that break even. It's that cycle until you get and you're playing with house money. Once you're playing with house money, confidence will be there, but don't get cocky, right? So the next step I want to get into, on basic risk management here is it's really as simple as that. It's simple as not over trading. It's simple as calculating your risk before taking a trade. It's as simple as not doing anything emotional. It's as simple, I gave you a few tips on how to navigate if your account comes back into drawdown. But realistically, once you become a profitable trader, you're starting to look at managing trades in profit. That's where it really becomes interesting. This is where the money is made. This is the most important part of the trade, is when the trade's in profit. That's a little video about risk management here. It's not a very complicated topic, but I hope the tips inside here are going to help you, learn a little bit about risk management, start to implement it, start to really take that seriously. With that being said, so one thing I want to talk about is, obviously you've seen online there's a lot of trading services, right? And this is an important factor because people are charging $500 to $1,000, $10,000 for Forex courses, trading courses, you name it. People are charging $200 a month for signals. Should you be buying this stuff? Now, the obvious thing that's going to be super attractive is going to be buying signals. You guys obviously want to be like, look, if I can just copy a guy who's sending me trades, I'll make money. At the end of the day, I have not seen someone become rich from copying someone else taking signals. You just don't see it. The only person getting richer is the person sending them. So realize that. Now the reason is a very simple reason. If you don't understand what's happening on the charts, you don't know how to analyze, you don't know what the trade means, you don't know why he entered, you don't know anything, and you're blindly following, first of all, the message can come at any time. You don't know. You have to be like a hawk on the phone, ready to take it, ready to calculate risk. It doesn't work like that. Risk takes time to calculate. The second step is, by the time you've figured all of that, the entry might have been gone, you entered late. A lot of these signal guys like to put TP1, TP2, TP3. You might not close at TP1, get stopped out, but that trade was still a win. How do you know? Because you have no input in that. You don't know the analysis. Now, the best way, if you're looking for the solution, which is what I encourage more, is to understand how to trade. Take accountability. Accountability is going to be massive in your journey. The second services are going to be obviously education here. Education that is just information is not going to be worth paying big bucks for, because you need to learn also application. This video is great. It's free online. So the same thing is, imagine you paid $5,000 for that. You can save that money. There's no point of paying for those type of courses. If the content creator's information is bad online, his free information is bad, the paid one won't be any better. There should be enough value that online you can give as much free information and at the same time paid information will be more on the application front. This is more what I do. I don't sell a course, and that's the reason, that's why you're watching this online for free. I do have extra videos that are based on what members' needs are, and those are just an add-on. The best type of scenario is going to be where you can get feedback. You need the feedback. You need to be able to speak to someone who is better than you, get feedback from them, and see how they trade. You need to be able to see that, because if you don't know how they trade and they only tell you how you trade, you're not going to be able to see it in the live moment. This is going to be the best type of education, is to be able to see. It's like watching a professional and being alongside them, right? So that is basically a small section about trading services. Do tread with caution and make sure that you are looking at value-based. Make sure that you're joining somewhere that you want to be part of, and it's not just going to be a total mess, right? So it's very, very important. I did want to add this section because a lot of new people will fall into traps and spend unnecessary money. So hopefully this helps, and let's get on with the video. All right, guys, so we've reached to the last part of this video series, and congrats to yourself. A lot of information to take in, but this part is going to be one of the most important, because this is where we're going to put it all together from step one all the way to the final step of TP. And I'm going to show you how to put everything together, right? How to put everything from step one and all the way through. And what we're going to be using is PipLabs. PipLabs is our own backtesting software we created on web browser, the first one with tick data, which means you can view the markets in a live setting, which is exactly what we want to see, how they did in the past live. So backtesting softwares are basically a software that allows you to simulate and practice your trading from previous data, kind of like basketball players, football players practicing before a match. So what we're going to do is we're going to start a simulation on gold here, and we're just going to simulate a day of trading. I'm going to show you the whole process here. So first of all, you select the strategy. The reason you can select the strategy here is because in your dashboard, you can track statistics on that specific strategy. I'm going to name the simulation 2025 course, and we're going to use the simulation type is classic. Classic is just a regular simulator. We also have prop firm simulator, which you can actually practice passing a prop firm challenge, which is something extremely cool. Balance, you can choose whatever balance. We're going to keep it the default 100K. And leverage basically refers to how much leverage you have on your account balance. If you're risking 1 to 2%, you're not going to be over leveraging, and you don't need too much leverage here. You can research more about that, but again, 1 to 100, which is what's set, more than enough. Unless you're over risking, then you need more leverage, but you shouldn't be doing that anyway. So let's start this up. So the first step we need to do is we need to get to our volume session. So in this case, I'm going to be trading London session, and I need to check my time zones correct. It is, it's already set Dubai. And I'm going to be 1 hour before London. So if you see the clock here, 1 hour before London for me is 11 a.m. here. So we have a bit of news, but these news are not till 18:30, 20. It's okay. I don't need to be worried about it since the news is pretty late here. The news is pretty late, and it's not going to be something I'm too worried about because it's not going to be coinciding per se with my session here. So the first thing I want to do is set up our analysis. So first time frame we're going to start off is on the weekly time frame to do our markup. The only place I can see to draw a line here is going to be the weekly resistance, because that's where we're close to. So I'm going to put this as WR, which means weekly resistance, and that's how only thing I need to mark. I'm not too worried about this level below. It's very, very far away. I don't want to crowd my charts, so I'm just going to leave it at weekly resistance. Next time frame I'm going to go down is the daily. Daily actually has two zones here. We can see daily has this previous daily support here, and then obviously our most recent one here, right? We normally want to take the most recent ones, but this is how it looks. And while we're at it, we have to check what bias is doing. So you guys remember bias. Previous daily did close a bearish, and now previous 4 hours also closing bearish. So today we only look for sells here. So we also have this previous 4 hour support. Now what's interesting, this is being crossed through with a wick here. So it's kind of, since it's crossing through with a wick, it's not going to be that important because the wick is crossing it, but nevertheless we have to mark it and see how that ends up causing price. So today's bearish bias, I'm only looking for sells. We have some news today, but that's not till later as we discussed. So let's continue with moving down the charts. Bearish bias, only looking for sells. I'm not going to mark these resistances because I'm only looking for sells. So now we go down to 1 hour time frame. 1 hour time frame is closing very heavy bearish. We have nice clean candles towards the downside. Yeah, very nice clean candles towards the downside. So this is immediately going to become a trading zone because of our clean candles here. So as we can see, some beautiful clean candle zones here. This candle is currently pushing up here. We have clean candles till that 4 hour support really. And then we will see what price wants to do. So we need structure to form. We can either take setup number 2 here, which means price pulls back. we see it get below the daily support and we take sells. Remember the setup number 2. I'll have someone pop up a screenshot. Or we would look for this to create structure here to give us that setup 1 sell. So we'll see what it does and then we can take it from there. So now this candle formed a bullish candle here. This actually forms a support that gives us a zone to potentially sell below, right? Because we have a support formed here. So either the options here would be you get the setup 2 or you can look for the setup 1 here, right? And now we can just skip by 15 minutes so we get one of those options. So we skip the next 15 minute. As you can see, next 15 minute did the straight close below right here. So now this is actually giving us a setup, right? Because now we have a close below the support, which is a setup 1 formation, right? We have clean candles here to the left till the 4 hour. Now our stop loss here is around 40 somewhat pips here. First target here is only 15 pips towards the 4 hour, 50 pips to around the next support down there. So yeah, stop loss is pretty steep here. Stop loss is pretty steep. But we do have target if we can cross the 4 hour. Now the question is what we spoke about and why I want to show this is that we can get down to here, but 4 hour might be a problem. So what might happen here is we might get stopped out at, not stopped out, but we might get stopped to break even at the 4 hour support, because that's where we'll have to move break even, because that's our next target. Our next target is the 4 hour support. But like I said, a wick crossed through it. You can see yesterday crossed through it multiple times. Might not be as important, so we can try to trade through it. Because today's bearish bias, I expect price to go down. So what I'm going to do is I'm actually going to set an order. I'm going to take a sell break of the low. Stop loss is going to be above the highs here. Right? And actually it should be a sell order. That would help. We don't want to take buys from here. Stop loss would be above the highs. And then target will be a nice little 1-to-1. Will be perfect there. So let's confirm that. And we're risking 1% in the trade. What we're going to do is we're going to play by ticks here. So we're not skipping too fast, and we'll see how everything goes here. So candle is now making its top wick. Entry will be break of the low. We'll speed this up so we're not waiting too long. And we'll see what ends up happening here. So I'm just skipping quite fast now. You can see this is how the candles would move in real life here. And it wouldn't trigger you till it breaks the low here. So they would move, of course, slow in real life, but this is the cool thing with backtesting is you can watch the behavior of candles. Boom. So that actually triggered us there. Got triggered into the position straight away there. Now we're pushing into profits. This candle does not have a top wick, so there could be a scenario where we get triggered into a top wick. The cool thing is we have created this candle high, so technically I can move my stop loss to this candle high here if need be, so I can reduce risk already because that's the new high that was made. But we'll leave it there for now, just in case some funny business wants to happen, of course. So we'll see what ends up happening. So this we're holding drawdown. If you go look at the trade feed, we're actually down 190 bucks. It's nothing too crazy, right? And now boom. So this is what we talked about, them being no top wick. You saw how when that candle opened there was no top wick. What that means is there was no wick that was made. Price went and made that top wick. So that could have been a threat, but our stop loss is so far away, it's not going to matter much. It's not going to matter much because of where our stop loss was. So So it did make its top wick. Boom. Now we're continuing down quite nicely here. Again, no top wick. We tapped the 4 hour here, so we need to survive in this zone. So we'll slow it down a bit because that's that 4 hour support. So we need to be able to get back below that 4 hour support. So hopefully we can respect structure and get down below the 4 hour. We're obviously reacting off it. Hopefully this can flip and then we'll have to move stops to break even and to be in a safe position there. So boom, that has flipped now. So this is where stops now can go to break even. So I just drag it to entry. If you look at P&L now, we are up 269. So we kind of have to let it do its thing right now. We can speed this up and see if we get back down and just start melting. And hopefully can get a TP hit here. So it can take some time. This is a very, very large TP we have here. You know, it's definitely a big task. So it can take some time for price to go ahead and hit that TP. We'll just make sure 1 hour the support is not earlier. No, that's fine. Because sometimes the supports can be earlier if you remember the cascading support we discussed. So hopefully we can get to there and tap the TP there. So we'll see what ends up happening. We can speed this up and see if we eventually hit it or what. Boom, TP would have been tapped. So Perfect. That is a setup one entry. You can see it takes time the bigger the TP we have. Now, you don't always want to set big TPs, guys. You want to just try get your 1-to-1. In this scenario, we had a very big range, bearish bias, a lot of volume allowing us to do this. And, 50 pips is definitely a very, 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 very big TP here. And, it will take longer, of course. And sometimes you'll get stopped out break even because it will not have the volume in it to continue pushing. So, very important to understand that and see how that works. But target was tapped here. We were able to push through the 4-hour, and even if we set break even directly at the 4-hour here, we wouldn't have been stopped out. So that's nice to see. And here we can see the history of that. And yeah, 1% profit on a 100K account, $1,000, a little bit more to be honest. And yeah, brings the account up there. So that's an example, and you can practice trades on this stuff like that. The nice thing is, after you develop a bit more, of trading on a software like this, you can see your statistics on a dashboard. But I hope that put things into perspective on how it is from entry to exit. Obviously, if it hit my stop loss, I would have lost the trade. You move on to the next because we calculated risk before the trade was ever taken. So it doesn't really affect you because the outcome, you're trying to control whatever's inside of your control. The outcome is not inside of your control. It just has probability and statistics to that outcome. So you can't really control that all the time. So once you understand that, you set your plan, you follow your plan, you take the trade, then that's it. This trade showed you how to hold drawdown. You saw during the trade, price went in drawdown. We were losing at some point in the trade, but you can't be fazed by that. You have to trust the plan, right? So important to understand those small, minute details there. And trust in the process here. There are times where you might have to even close your trade earlier than your 1-to-1. You might have to take TP earlier, but this is all stuff that's going to be developing, right? This was a big target. Sometimes you might have had to close early and accept that because of what market was doing. This is stuff you're going to have to learn. I would love to put it all in one video, but I can't. It will just be too confusing, and it's a bit of advanced concept. It's why I include an advanced concept in some of my content with the boys and the exclusives. It just makes it a lot easier to have that, so people are not confusing. Because the number one thing is I don't want you guys to leave confused. If you leave confused, how are you going to even start anyways? How are you going to do anything? So yeah, pretty nice on the dashboard as well. Once you start building your simulations here, you can get all your statistics, win rate, you can see your balance, your average P&L. All of these statistics are going to be good things for you guys to track. Your average losing day compared to your winning day, that's important. And all of that stuff, and to see your growth curve, the calendars, what days you're profitable, what day you're not. So this is all important stuff, and this is how you put it all together. So with that being said, let's get on to the next part, and hope that all made sense. So guys, I know you've heard my voice for a while now, and I want to wrap this up and make a small outro and explain how I'm able to do this for free and why, right? I want to tell you how and why, and just wrap it up here. I hope you guys did enjoy and found a lot of information. Any support on the channel would help get this out to more people so they can improve. The reason I do this for free is because people say a great trader would never expose his strategy. Yeah, but at the end of the day, you have to apply it, and application takes time. You need people to help you to apply. Information is going to be great. It's going to give people the right foot forward instead of trying to wish for these hopes and dreams that basically it's just a whole lot of BS, in my opinion, because I've been through it. I've been through all of the BS and stuff like that. So that's why I love to put these out, because it gives people such a good path, and it feels like that's my impact I can make here, while at the same time building a personal brand by being present on social media. You see it in this video. I've used various softwares. At the end of the day, that's a promotion for my software in sorts here, right? So it does make sense. Nothing in life is for free. Never accept a free dinner. And at the end of the day, that's kind of what it helps me with here. So I want people to understand that and realize that the value I'm putting out here, I'm not trying to hide anything saying, look, you have to purchase to get more information. No, simply it doesn't work like that. The information I've given here is the information I actually use to trade. People who have access to all my advanced content and stuff like that will tell you, yes, this content here is his fundamentals of the way he trades. The advanced concept is just the small details on top of it, which inevitably will get you more consistent. But if you don't nail these, like these will get you profitable once you nail these. And consistency long term, and to be even more profitable, will be adding things on that, and more importantly, experience, right? So At the end of the day, this is what made this possible. So anything would help with in forms of support on the channel. Leaving a comment, a subscribe would be great, and a like to get this content out to more people. Help them out in this journey, set them on the right foot, not wishing for these useless dreams and goals that will never happen without a correct path, right? You can't reach your goals if you don't know where you're going. You will just walk around in circles. Goals are meant to be met, and the way to meet them is from hard work and dedication. And if you don't know how to put in hard work or dedication and putting in useless work, it's just going to be a frustrating journey. It is already. Don't want to make it anymore. So I'm really excited for you guys to go along on this journey. Best of luck with everything. Take care. Tradesharpe, big up. Let's get it, guys. Go smash it. With that being said, peace. See you all.